Imagine waking up to discover that the price of chicken, pork, and eggs at your local supermarket has suddenly jumped overnight, not because of a disease outbreak or fuel costs, but due to a tiny chemical most shoppers have never heard of, L-lysine. Yet, behind the scenes, this humble amino acid is the latest flashpoint in the escalating trade rivalry between the United States and China, threatening to spark a new round of economic turbulence that could impact your wallet, the global food chain, and the geopolitical balance of power. What happens when the world's dominant L-lysine producer, China, clashes head-on with American industry over allegations of unfair trade? And could a battle over animal feed snowball into something far bigger? Stay tuned, because the stakes are rising fast. We're diving into the surprising story of L-lysine, the U.S. anti-dumping campaign against Chinese imports, and why the outcome could reshape not just Midwest farms, but global markets for years to come. To untangle this drama, let's start with the basics. L-lysine is an essential amino acid, the kind animals, like pigs and chickens, cannot produce themselves. It's a building block for protein, crucial for muscle development and healthy growth. Modern agriculture has become dependent on supplementing animal feed with synthetic L-lysine, ensuring livestock reach their genetic potential for size and productivity. How is it made? Through sophisticated industrial fermentation, where bacteria convert sugars like dextrose into L-lysine in giant bioreactors. The result comes in various forms: a concentrated liquid, the crystalline white powder known as lysine HCl, granular lysine sulfate, or even pebble-sized capsules designed for ruminants like cattle. All these versions help farmers fine-tune feed formulations for maximum efficiency. Here's the kicker. Over the past 2 decades, China has come to dominate this market. As of 2024, Chinese factories supply more than 70% of global L-lysine, flooding international markets with low-cost exports. The numbers are staggering. In just the past year, the U.S. imported nearly 78,000 metric tons of L-lysine from China, valued at almost $96 million. That's enough to supplement feed for millions of animals and, by extension, support America's vast poultry and pork industries. But this low-cost supply chain hides bigger questions. American producers argue they're being undercut by Chinese firms selling below cost, a practice known as dumping, while also benefiting from Chinese government subsidies. In April, the Lysine Fair Trade Coalition, representing more than 80% of U.S. L-lysine production capacity, filed a petition with the U.S. Department of Commerce, DOC, and the International Trade Commission, ITC, demanding steep anti-dumping and countervailing duties on China's exports. If successful, these duties could exceed a staggering 197%, basically tripling the cost of Chinese L-lysine overnight. These cases are becoming more common as the U.S. seeks to address perceived unfair trade practices, notes Angela Zhang, a leading trade lawyer specializing in US-China disputes. But this isn't just a matter of corporate profits. It's about the lifeblood of U.S. agriculture, the cost of food, and America's tense relationship with its biggest economic rival. Let's pull back and see why this matters. L-lysine might be obscure, but it's omnipresent in modern animal farming. Without it, feed becomes less efficient, animals grow more slowly, and farms become less competitive, not just in Kansas or Iowa, but against foreign meat exporters too. As Jim Sumner, president of the USA Poultry and Egg Export Council, warns, increased input costs will make U.S. poultry less competitive in global markets. And those costs aren't theoretical. When L-lysine prices spiked by 15% in early 2025, feed manufacturers saw their expenses surge. For pig producers, a 20% jump in lysine prices could add $5 to $10 per ton to feed bills. Multiply that across millions of animals, and the price tag quickly climbs into the tens of millions, ultimately trickling down to grocery shoppers. There's also a technological and strategic dimension to consider. China's dominance in L-lysine isn't accidental. Over years, its government promoted the growth of its biotech and amino acid industries through incentives, cheap credit, and infrastructure. Today, Chinese plants are more efficient, larger in scale, and tightly integrated into global supply networks, a textbook example of how state-backed industrial policy can tilt the playing field. Many U.S. producers feel boxed in. Tariffs on imported goods ultimately translate into higher costs for consumers, explains Ethan Harris, head of global economics research at Bank of America. Yet their complaint isn't just about price, it's survival. The Lysine Fair Trade Coalition alleges that U.S. jobs and capacity are at risk, and unless action is taken, American companies could get wiped out. This brings us to the mechanics of the case. The U.S. Department of Commerce and the International Trade Commission will investigate. First, the ITC will judge whether imports are harming the domestic industry. Then, if injury is found, the DOC will compute just how much Chinese lysine is being dumped or unfairly subsidized. If both boxes are checked, steep anti-dumping and countervailing duties kick in, making Chinese imports far more expensive. But what about the timeline? The preliminary injury determination by the ITC is due in July 2025. Before then, importers may already be required to pay cash deposits, especially if there's a last-minute surge in Chinese shipments. That means the market, and everyone in the supply chain, faces months of uncertainty, hedging bets on which way the gavel will fall. It's not just the U.S. taking action. In May 2024, the European Union launched its own anti-dumping probe into Chinese lysine. The message from Western producers is clear. They see the current trade dynamic as unsustainable. Yet the global context raises the stakes. The worldwide L-lysine market is projected to approach $9 billion by 2032, with demand rising thanks to both growing protein appetites and the spread of livestock-intensive agriculture in developing economies. So what's at risk? For one, a global game of tit-for-tat. Trade cases like this can escalate trade tensions and lead to retaliatory measures, warns Chad Bown of the Peterson Institute for International Economics. China has the power to hit back. In a worst-case scenario, Beijing could slap tariffs on U.S. soybeans, corn, or even meat exports, key markets for American farmers. China could retaliate by reducing purchases of U.S. soybeans, corn, and other agricultural products, says trade consultant John Bays. The damage wouldn't end at the farm gate. It could ripple through rural economies and plummet into the broader U.S. export sector. But could the U.S. simply turn elsewhere for lysine? The answer is complicated. Alternative sources exist, such as producers in Europe or Southeast Asia, but they don't have the scale or prices to replace Chinese supply without significant disruption. And ramping up domestic production isn't as simple as flipping a switch. These are capital-intensive, biotech-heavy facilities that take years to build or expand. Livestock producers might try to tweak feed formulas to reduce lysine use, but that comes at a cost. Slower animal growth, less efficient feed conversion, and thinner profit margins. And what about the structure of the U.S. lysine industry itself? While 3 companies control more than 80% of domestic capacity, even they admit that without protection, keeping pace with Chinese efficiency is a daunting task. Duties on L-lysine will increase feed costs for pork and poultry producers, impacting profitability, cautions feed industry consultant David Hegwood. For family farmers with razor-thin margins, every cent counts. The doctrine of free trade versus fair trade is also under scrutiny. Some economists argue that consumers benefit from cheap imports, even if it harms some domestic industries. Others counter that long-term dependency on rival nations for critical inputs, whether it's semiconductors or animal feed additives, carries hidden risks. And with US-China relations at their frostiest in decades, even seemingly technical trade disputes quickly get caught in the crosshairs of broader strategic competition. The question isn't just who gets to make and sell lysine, it's whether the fight over this colorless powder signals a new era of industrial policy, where economic security and food supply chains become weapons in a much bigger contest for global influence. As Darcy Vetter, former chief agricultural negotiator at USTR, puts it, the case highlights the ongoing tensions in agricultural trade between the U.S. and China. So, as the DOC and ITC hearings loom, the world is watching. The U.S. must weigh the immediate relief tariffs could bring to embattled domestic firms against the looming threat of retaliation and higher costs for everyone else. Will America stake its food security on trade enforcement? Or will the fear of sparking a broader economic conflict force a compromise? And crucially, if China decides to strike back, what could that mean for the very farmers the U.S. seeks to protect? Could a move to save one sector doom another? As prices climb, protests mount, and politicians jostle for position, this is more than a battle over a feed additive. It's a test of economic priorities in a dangerously interconnected world. In the next chapter, we'll explore the high-stakes scenarios that could play out for farmers, food producers, and global consumers, and reveal how a single trade case might end up transforming the global food system itself. As the U.S. government moves to investigate the Lysine Fair Trade Coalition's allegations, American agriculture stands at a pivotal crossroads. The stakes aren't limited to a single additive or industry. The outcome could reverberate through global food supply chains, household grocery bills, and even the world's most sensitive diplomatic relationship, the one between the US and China. Let's break down the possible futures that could unfold from this trade dispute, each one rippling outward into new layers of consequence and opportunity. Imagine scenario 1. The US imposes the full slate of anti-dumping and countervailing duties, hammering Chinese L-lysine imports with a tariff near 200%. With China now making up more than 70% of the global L-lysine supply, it's a near certainty that prices will spike. We've already seen a 15% jump this year just from the threat alone. For America's pork and poultry producers, L-lysine is as indispensable as corn or soy, a vital building block for animal growth. If L-lysine costs leap by 20%, as several industry groups fear, that translates to about $5 to $10 more per ton of pig feed. On a single large farm, that's tens of thousands in extra expenses annually. David Hegwood, a veteran feed industry consultant, warns, duties on L-lysine will increase feed costs for pork and poultry producers, impacting profitability. Some smaller operations may simply not survive. What does this mean at the dinner table? Higher prices for bacon, eggs, and chicken, and not just at your local supermarket. As Jim Sumner of the USA Poultry and Egg Export Council puts it, increased input costs will make U.S. poultry less competitive in global markets. If the duties stick, U.S. livestock exporters could lose hard-won market share to Brazil, Vietnam, or Thailand, where feed costs remain lower. It's a real threat to America's status as a global agricultural powerhouse. Now picture scenario 2, retaliation from China. Experts like John Bays warn, China could retaliate by reducing purchases of U.S. soybeans, corn, and other agricultural products. This isn't speculation, it's happened before. In previous agricultural trade disputes, Beijing has quickly moved to curb U.S. crop imports, targeting America's farming heartland where the economic pain is felt most acutely. The numbers are staggering. China buys more than $20 billion in U.S. soybeans annually. Even a modest cutback could create a glut on world markets, crashing prices for American farmers. With the EU also considering its own anti-dumping measures, U.S. producers might find themselves squeezed out of not just one, but multiple major export markets. Scenario 3 is a negotiated settlement, the best-case outcome for all parties. In this vision, U.S. and Chinese negotiators hammer out a deal that reins in Chinese subsidies and reduces the volume or price of Chinese L-lysine imports without resorting to extreme tariffs. That would stabilize prices, prevent a wider trade war, and give global food markets some much-needed certainty. But here's the hard truth. Achieving such a diplomatic solution will require both sides to compromise, at a time when trade relations are growing frostier by the month. So, what are the opportunities in all this turmoil? For American L-lysine makers, steep tariffs could mean a sudden boost, at least in the short run. Chad Bown, a senior fellow at the Peterson Institute, notes, trade cases like this can escalate tensions and lead to retaliatory measures, but they also provide breathing room for domestic producers to rebuild market share. There's also a silver lining for alternative suppliers, especially in Europe and Southeast Asia. As U.S. feed manufacturers look for non-Chinese sources, European lysine producers could step in to fill the gap. A more diverse supply chain could, in the long run, make food production more resilient to shocks. Yet not everyone will be able to adapt. Smaller livestock farmers, especially those barely breaking even after years of volatile markets, may find themselves priced out. According to USDA estimates, more than 30% of U.S. hog operations already operate on razor-thin margins. Any sharp increase in feed costs pushes them closer to the edge. Angela Zhang, a trade lawyer who's tracked dozens of US-China disputes, offers a grim prediction. These cases are becoming more common as the U.S. seeks to address perceived unfair trade practices. But for every action, there's usually a counteraction somewhere else in the supply chain. Let's zoom out and consider the potential for a much broader trade confrontation. L-lysine might sound niche, but it's really a microcosm for something far bigger. The U.S. is increasingly willing to use trade tools to challenge Chinese dominance in key supply chains, from microchips to solar panels, and now, even amino acids. If the precedent is set here, we could see a domino effect. New petitions against Chinese vitamins, feed additives, or ag chemicals. Each adds friction, cost, and uncertainty to global agriculture. At the same time, the Chinese government, facing similar trade challenges from the EU, may double down on efforts to move up the value chain, pouring more subsidies into higher-tech agricultural inputs or pivoting toward domestic consumption. The result could be a world irreversibly divided into separate, competing food supply blocks. And as history has shown, food is never just food. It's leverage, security, and sometimes a weapon. So what should farmers, agribusinesses, and even ordinary consumers take from this unfolding saga? First, awareness is power. If you work in agriculture or food supply, track protein prices and ingredient sourcing more carefully in the next year. With the ITC's preliminary decision due in July 2025, price volatility is almost certain. Farmers and feed producers should start exploring alternative suppliers, whether in Europe or Southeast Asia. Adjusting feed formulations or locking in supply contracts early could save money and headaches if the market turns chaotic. For agribusiness investors, the story offers a clear signal. There's real risk in depending on a single country for a strategic ingredient. Diversification is more than just a buzzword. If China's share of the global L-lysine market slips, remember, it's over 70% today, look for rapid growth opportunities among up-and-coming producers elsewhere. The market is projected to reach nearly $9 billion by 2032, and disruption always creates winners as well as losers. Policymakers, meanwhile, would do well to coordinate with trade partners and prepare for the possibility of cascading retaliation. With both the EU and the US taking aim at Chinese amino acids, there's an unprecedented opportunity for joint pressure, or, alternatively, for a race to fragment the market further. And for the everyday consumer, don't be surprised if meat and egg prices creep up over the next year, even if you've never heard the word lysine before. The invisible ingredients that feed our food matter more than we think. There's also a vital lesson here about the interconnectedness and fragility of modern food systems. A single trade dispute over one amino acid can set off a chain reaction that reshapes global diets, trade flows, and even geopolitics. Now let's step back to the big question we posed at the start. What will be the real impact on U.S. farmers, world food prices, and the future of US-China trade relations? The answer, as we've seen, is messy. Tariffs on L-lysine will almost certainly drive up feed costs, putting pressure on American pork and poultry producers. Some farmers may go under, others could adapt, but few will escape unscathed. Food prices, especially for basic proteins, are likely to rise, hitting family budgets across the country. If China retaliates, U.S. grain and soybean exporters could lose billions in sales, with ripple effects from the Midwest to the Gulf Coast. Trade tensions would deepen, and the world's two largest economies could stumble closer to a full-blown agricultural trade war. But if cooler heads prevail and a settlement is reached, there's hope for a more stable and balanced system. Perhaps this dispute will force a rethink about how we build resilience into food and feed supply chains, and how much risk we're willing to bear in the name of fair trade. Here's a secret fact that almost never gets mentioned. The technology behind L-lysine production, microbial fermentation and strain engineering, was originally developed in Japan and the US in the 1950s and 60s, before China became a powerhouse. That means the know-how to rebuild local production is there, if there's the will and investment to do it. It won't be easy, but it's possible. In the end, the L-lysine case is a wake-up call. The food on your plate depends not just on the skill of a farmer, but on a vast, unseen web of trade, technology, and global politics. If you want to stay ahead of the next big food shock, or just understand what's really driving those price changes at the grocery store, hit subscribe, share your thoughts in the comments, and stay tuned.